Hey guys, good afternoon, everybody. Today is Wednesday, June 8th. It is 2 p.m., our scheduled time for our group mentoring session this week. So I'm going to go ahead and set up this room real quick, and then I will send out the link for you guys to join in the premium. And then from there, we can get started with our session for today. All right, looks good. A couple more things here to update. And I think we should be good to go. All right, solid. Looks good. Let me get this link sent out to you guys here. All right, put that link sent out. There we go. Add up real quick. All right, cool. Links are sent out. Let's give it some time for people to join in. So as people make their way in, I'm going to go ahead and mark up areas of liquidity here on the US 30. And I'll give it some time for people to join in. So that goes the 1 hour. The 30-minute, 15-minute, 10-minute, five-minute, and lastly the 1 minute over here. All right, so I pretty much got a couple more up here. Pretty much got all of the liquidity marked up here. Looks like there's a lot that's built up, but looks good. All right, guys, so it looks like majority of people are here. So hey, David, how's it going? Hey, Matt, good afternoon, everybody. It's Wednesday, June 8th. It is 2:04 right now. Our start time for this mentoring session is 2 o'clock. So looks like people are still making their way in. If you guys have any questions, feel free to put your questions in the chat. Just a reminder, the questions are going to get answered in the order that they are sent into the chat. So I don't have any questions lined up. So basically, whenever anyone asks a question, we'll start off with that. And from there, you guys can ask as many questions as you like, and I will cover as much as you guys need for the day. So this session will pretty much run until we run out of questions. That's pretty much how these sessions work if you guys are new here. So, the more questions, the better. I'm here to help you guys out. Yeah, I mean, literally, I'm here to help you guys out. So yeah, well, I mean, we're pretty much waiting for some questions here. I'm gonna go ahead and mark up the liquidity here on the higher time frames as well, just in case I want to catch something on US 30 as the session progresses. I'm currently looking for a sell right now for USD Cad. We don't have that yet. I'll be looking for it. I just got funded on my forex.com, my 10,000. So I have 10,000 in that account now. And I'll be forward testing on live. So yeah, that should be exciting. It should be fun. It's just going to be a matter of when we get an entry, and then I'll take that. And from there, I will be tracking those trades. But yeah, it's been pretty hot. I mean, if you guys saw the all of the other intraday entries, it's been pretty solid. So I got everything marked up here. All right, cool. Yeah, David wants me to go over a speculative entry, so I will go over that shortly. So let me finish marking this up real quick, and then we'll get over to that shortly. So I'm just gonna mark this up, and I'm gonna leave it alone. Just want to get it out of the way, so in case I see any entries later. And I've only been taking trades during Asia lately because Kevin's been taking it during Asia, and you guys have seen his profits. So, I mean, I've been taking them during Asia, and they've been hitting. So that's why I've been on Asia this week. I'm not, but these liquidity pushes, these speculative moves that David wants me to cover. I mean, they hit pretty often. They hit hard. So it's like, why not? So I'm gonna keep looking for entries here, but let me just finish marking these up. I think that's it. Let me go on the 10 real quick. All right. All right, all done. So what I'll do right now is I will provide an example for the speculative liquidity pushes. Basically, it's the same trades that me and Kevin have been taking. So that's why Kevin's been locking some crazy profits. He's like glued on the screen though. I'm not necessarily on the screen that much, but he's been like pretty laser focused. I'll just go here on the clean chart and let's see if I could find one here. I'm just going to show you guys an example. We can't really look right now because I don't think there's a bias. Yeah, there isn't really much of a bias. So we're going to assume the bias just for example purposes. But typically, you do want to have some sort of bias in the market before you take these types of trades. So let me see if I could find. Just gonna scroll around, see if I can find anything here. Any possible. Okay, perfect. So there's actually one example that's right here. I know there's no bias, so don't take this as like an official entry, but I'm just going to show you guys how this works. So first off, I'm going to go and mark up liquidity, right? So if you guys are not familiar with how to mark up liquidity, what you do is you'll turn on your K2 high-low indicator. You go to indicators, invite only scripts, go to K2 high-low, you'll click on that there. Once you click on that, it'll pop up right here. And that's how you have the liquidity marked up. In order to get the lines on the chart, you're just going to do it manually. It's very simple. All you're going to do is you're going to open the horizontal ray tool. You guys can use a shortcut if you want. The magnet tool is going to be not necessary, but it makes things a lot easier. And this pencil tool over here is going to allow you to draw multiple lines. So basically, I get the horizontal ray tool. I'll go ahead and mark up lines where all of these high lows are. Just make sure you mark up the ones that have not been tested. So these over here, for example, like this one, this is no longer a liquidity area because it's already been broken, right? So you're going to go ahead and delete that. You're just going to want to mark up the ones that have not been tested yet. So like, for example, these have been tested. They're no longer useful. This has been tested, no longer useful. This one right here has not been tested. You can see no price has touched this point. So this is going to be another high. Again, right here, and right there. And that's about it. On the bottom side, you have one right here, and then you have another one below here. Other than that, everything else has been tested. So once you have that drawn up right there, you can identify where liquidity is sitting. We currently don't have a bias. So like, for example, I'm just going to show you guys real quick. You guys can use the momentum here for help, but it's not like 100% necessary, but it's, it does help you identify things. So basically, when you have all this liquidity here marked up, you have liquidity sitting right here, and then you have liquidity sitting below here. The way that you identify these areas of liquidity where there's likely to be a volatility spike is whenever you have these liquidity lines right next to each other. So basically, you want these liquidity lines to be very close like this. Like, for example, this here could possibly be a liquidity line, but it's kind of spread out. So I don't think I'd take a trade up there. However, these here are pretty close, right? So, I mean, there's no specific set in place measurement, but I mean, you guys can tell the difference, right? These are pretty close and these are pretty close. This is kind of far. It's still kind of close, but it's not close enough for me to identify them as being, like super close. You basically want something like this. So if you were to measure this, it's basically gonna be less than 5 points. Less than 5 points is going to be how far you're looking for down here. Let's see, it's a little more. It's about 7 points. So like it just depends. It's subjective. Probably under like 8 points would probably be the most. Because let me measure this up here. Okay, so this is like it's 12 points. So this is, you can tell there's a huge difference. This is a 12-point gap. This is a 3-point gap. And this right here is a 7-point gap. So you guys can see the huge difference right here, right? This is double than this. So I would consider this okay, this definitely not okay. But once you guys have these drawn up, basically the first thing that you want to cover is the bias, because you're only taking liquidity pushes in the direction of bias. You can take them both ways, but I don't recommend it. You're basically gambling at that point. You want to take in the direction of bias so that you know exactly that price is going to go in that direction, so you don't have to worry. Even if you take an accidental trade, if it's in the direction of the bias, you'll probably hit your TP. So once you have that set up, in order to determine what the bias is, you look at the IG sentiment right here. Basically, you want the sentiment to be above 60 to 65, if not 70% or higher. 70% or anything above 65% is going to be better, right? The higher the bias, the better. It's going to be a stronger move in your direction. So like we don't have it right now because, obvious reasons right here, it's not in that number that I just mentioned, but we're just going to assume that it's bullish. We can't tell if it's bullish or not because this was at a previous time, but we're going to assume that the bias is bullish. So when you assume that the bias is bullish, you're basically waiting for price to come over here and hit this area, right? When it hits this area, you can take it for a quick little speculative move, which is, it's speculative because there's no specific strategy that you're applying. You're not sure it's going to go in that direction. You have an idea it's going to go in that direction because odds are it'll probably push up to the next area of liquidity, but you don't know that. So in order for you to be safe, you just want to take it for a quick, maybe 100 pips or so. And you can keep doing this because liquidity gets hit very often. So like, depending on when you're trading, sometimes if I'm trading during Asia session, I'll have it set to 200 pips. If I'm trading and the spread is wide, I'll set it up to like 300 pips, like how we normally do for the 1-minute trades. So once you have like that idea and you're waiting for price to hit this area right here, what you'll do next is you'll just wait. So like when price does hit this area, you can hit a market order for a buy with your DOM and then have your TP set up ready so you don't have to worry about it, or you can set a buy stop. It's really up to you guys how you guys want to do it. There's a ton of different ways to apply it. So what you have is set up right here, basically what you're looking for is for price to hit this point. When price hits this point, you're going to enter a buy. So let me show you, for example, here. Price goes up. It's pushing up again right there. Slightly. Okay, so price pushed up right here, right? That's where I marked it up. At that point, you would enter a buy order right there. So at this point, or you're waiting for it to come back for another retest if you didn't get in at that specific time. As price pulls back, you're going to go in again right here. It pushes right through it, and then it hits the TP. If it doesn't hit your TP, it'll push up even higher. And that's how you would take that speculative trade right there. That's pretty much what me and Kevin have been doing. And that's how we take our quick profits. Also, Alexander over here, so he messaged me over here, you said tried liquidity pushes. Damn, it works. Thank you, Sean. So he's been doing it too. A lot of people here have been taking those speculative trades. Alexander took it right here. He has all wins for the day. He took speculative moves in both directions, which, as I mentioned, you can do, but you typically want to take it in the direction of bias, one way or the other, because you're taking a risk if you're trading both ways and you don't really have a bias to follow. So that is an example right there, David. Does that work, or do you want me to go over some more, or is there anything specific that you're kind of confused with? If there's anything that like you want me to cover more in detail, just let me know, because I know everyone has different questions and everyone has different issues with understanding how certain things work and some strategies work. So if there's anything specific, just let me know and I can go over it more in detail. But I think for the most part, that's pretty much it. It's not too difficult. I mean, if price was to come back down here, you could have taken a liquidity push to the downside. But other than that, there's no other liquidity sitting around this area. So yeah, I mean, if there's anything else, David, just let me know. Otherwise, I'm going to move on to the next question here. So we'll get a few more moments for David to respond if he has anything else. If not, we'll move on to Brian's question. Yeah, no problem, David. So hopefully that helps and you can take these trades on your own. And on the live session, you guys can take these on your own because I draw the lines for you. All you need to do is wait for price to get to that point. I mean, literally, well, it's obviously better if you guys have the indicator, but this is how a lot of people make profit on the live without even having the indicators. But the indicators are game changer, right? If you have indicators, you can take this all day. You can make huge profits like David. Not David, sorry, like Kevin. Like Kevin's been killing out. You guys have seen it. I mean, I'm sure you guys have seen it. Kevin's like, it's like mind blowing how much profit he makes every single day. Like 89K, that's crazy. He lets him run. The thing with Kevin though is that he trusts the move, so he basically rides it to the next area. So instead of just going for this quick 100 pips, if you're not comfortable, just take it for the quick 100 pips because you're still locked into the profit. What Kevin does is he pretty much rides it to the next level right here. He typically goes for either 100 to 200 pips. So if you were to do that, you can see here that it does push up that far, because what he does typically is he'll let it push to the next area of liquidity. It just depends. Like if you guys know what you're doing, you can do that. But sometimes you want to be safer and just go for 100 pips, because these trades are going to keep coming up. So like if you just catch 100 pips here and there, it'll add up. It's just up to your risk parameters. So that's pretty much it with the speculative liquidity pushes. Maybe at some point in the future. Well, what Kevin asked me personally was if I can hold a like an advanced class, because you guys see how much profit he's making, right? But he still wants help from me. Like he's still killing it every day, but he still wants help from me because obviously I know a lot more things than a lot of other people do. So in the future, what we might do is we might have an advanced class where either we'll do it online or we'll do it in person. So I can show you guys, the ins and outs of doing this, because there's a lot of other things that I look at in the market, but I don't necessarily know that you guys need like explanation, because I've been trading for so long that this stuff is just kind of like this strategy. I didn't realize that that you guys didn't know this, because the thing is it's like it's a pattern that I see every day, and I just took the trades. Like whenever I say I'm taking a speculative trade, this is what I'm looking for. I didn't necessarily understand that I of course understand now, but I didn't realize that you guys didn't really see what I was doing. Only a few people saw what I was doing. So that's pretty much how it would apply. But yeah, maybe at some point, I know Kevin wants me to hold a advanced class, which we'll probably do that at some point, but there's no timeline for when I'm going to be hosting that. Matt's asking, please give us a sell example too. So it's pretty much the same thing, just in the opposite direction. Let me see if I can find one over here. So let me just go back. Okay, so there's a perfect one right here. I think this is the one that I took today. Or let me just go over here real quick. I'll replay this. Okay, so the same thing. You guys, I just pulled it to like a random time, right? So random time right here. I'm gonna go ahead and mark up liquidity over here. I think this is the one I took this morning. When I took that sell, it was part of the breakout. So again, right here, like same exact thing. You guys mark up the liquidity. Once you guys have marked the liquidity marked up, you just identify where liquidity is sitting, right? Where you can make these entries. There's one area right here, and there's another area down here, right? These are two areas of liquidity. For the sell example here, we're just going to assume that the retail sentiment was bearish. Obviously, we can't confirm that because this is at a later time. Well, we're just going to assume that this number here, or this number right here, was 65%. That's typically where you want it for the overall buy. 65% or more, 60% or more. It's just the higher the better. But we're just going to assume just for this example here. So same thing that we did for the buy, we have marked up. We're pretty much looking for the liquidity to hit down here. And we do the same thing when price hits this point here. I will be looking to enter a short position. The main key here, guys, is that you have to look for the overall bias, right? You don't just enter every single trade. You look for an actual bias. And this is the trade that I took this morning. So here are my profits right here. So you guys can see I took a sell right here at 6:30 or around that time. That was the entry point. That's exactly where this trade here came up. So let me show you guys real quick. All right, so price broke below. You can see this candle push really fast, but basically that was where I entered the trade. It didn't just push down like that immediately. It kind of pushed down, then it pulled back, and it came back down. So basically what I did was I was waiting for it. I entered this trade manually. So same thing again right here. When price hits this point, see if I can move this over. When price hits this point right here, there's one of two things that you can do. You can either set a sell stop to enter it when price reaches that point, or you can just have your finger on the DOM. That's typically what I do. Have my finger on the DOM, so it automatically sets my TP stop loss. And basically, when it dropped down to that point, it entered and it hit my TP. Or it didn't hit my TP immediately, pulled back a little bit, and the second candle over here, it went straight through my TP. So this was the breakout, and this was also the speculative sell that that I took earlier. I'll see if there's another example here. Here's an even better example. I know this one's kind of messy because it was on open, but here is another example for you guys here. So same difference. I'm going to go ahead and mark up the liquidity again right here. So you got the lows right there. You got the highs right here. Have that set up. Liquidity sitting right here. So basically, I'm waiting for price to hit this point right here. We're assuming that the bias is bearish. It's going for a quick 100 pips here. So we're waiting for it to hit this point. Price gets down to that point right there. I would have entered that, hit like a sell off my DOM. Once I'm in the position right there, I pretty much just wait for it to go to TP and it goes straight to TP. So there's an example for a sell. It's the same thing we did earlier for buy. It's just you're looking for liquidity on the bottom end. Way to determine which direction to trade is when this number here is, so if this number is 60 to 65% or more, then you're looking for sells. If this number right here is 60 to 65% or more, you're looking for buys, right? So if this is higher, or if this is above 65%, you're looking for sells because you want to trade opposite of everybody, vice versa over here. When this is the opposite, 65% or more, then you would buy because you don't want to be trading with where everybody else is trading. So there's an example right there, Matt. Does that help, or do you want me to go over another one? Just want to make sure if you guys are good. If not, I will go over to Brian's question. So I'll give you a couple seconds here, Matt, to, I guess, give a response if there's anything else that you want me to cover regarding speculative trades. If not, we'll move on to Brian's question. All right, so I think that's it for that right there. Anyways, Brian's question over here is Brian's asking, Sean, can you show step by step how to get retail sentiment on IG for the Forex pairs? Yours shows a list of pairs. I see your list when you open it, but I'm not sure how to get to it. Thanks. Yeah. So Brian, I mean, the easiest way to do it is just to go to Google and you search in Forex sentiment. I don't know how to get there from the actual page, but here's the link. So if you could just search up Forex sentiment, you'll see daily FX right here. It says IG client sentiment. You click on that and that's how you get to it. I'll also put the link over here. Guys, so if you guys ever have any, if you guys are trying to find something specific, just Google it. It's the easiest way to do it. Like if you wanted to look up US 30 sentiment, right? So if you want to look up US 30 sentiment, you just type that in. Like you don't even have to go to or because we use CNBC. So if you look at CNBC, it'll give you the links right there. Like if you guys ever need to find something, it's probably easier just to Google it rather than navigate through the website. Because I personally don't even know myself because I don't necessarily use it like that. So that'd be the easiest way to do it, Brian. Maybe we can find it on here. Let me see. So market news, trading strategies. Okay, so you can just do this. So if you go to trading strategies, go to sentiment, that's where you would find it. Okay, it's not that difficult after all. If you're on dailyfx.com, just go to trading strategies and then go to sentiment, and then that's where you would find the list. But I try to make things as simple as possible, so I just Google it. It takes out all the guesswork. So, all right, that's it with that. I don't see any other questions, guys. So if you guys have any other questions, feel free to put them in the chat. Let me go ahead and see the public chat over here. Derek was asking, can you go over the V3 strategy on the 1 minute and 3 minute charts? Yeah, sure, Derek. So let me go over here to the 1 minute. See if I can find one here. Nope. Okay, so we need to find a good example for you guys. Nope. Nope. I mean, there weren't very many V3s that came up recently. No. The thing that I'm looking for here is a stop loss requirement because it hasn't been coming up very often. You need at least 300 pips. That's 260. I'll go into like earlier in the sessions, probably. Nope. Nope. Okay, let me just rewind to here. Yeah, no problem, Matt. Glad I can help you with that. No, the volatility just wasn't that high over here with the with these forex pairs. So I mean not the forex pairs, the US 30. So it's kind of hard to get that stop loss requirement. Let's see. No. Let's see. I don't think there's one here. No. Yeah, I mean, so there was like technically no V3s that came up today. I mean, we might have to go back a bit further. See if I can find something. So we haven't really been taking too many because the requirements aren't all met. I mean, for the most part, we don't have a bias. That's like probably one of the biggest factors is that we don't have a bias. So there just isn't any room in taking the entries here. Okay, let me go back a little further. Because I want to find an example where like literally every requirement was met so that you guys don't get tempted to take any shortcuts or skip steps, because that's typically what happens. A lot of people end up skipping steps and they end up doing horribly. And there's literally no all right, I think this is one right here. Hopefully this is one. No, it's 220 pips. We need at least 300 pips in order for us to have that. So we might have to go back like pretty far to get an example for that. I don't see anything here for a solid V3 that like fits all of the requirements. No. All right, let me just go back a little. I'm just gonna go to a random time because the thing is there's like no volatility today, or I mean, yeah, today specifically, where it's enough to identify a V3. Okay, let's see. I think there's one hopefully right here. Ah, perfect. It like was literally just enough. Okay, so here's an example of a V3 on the 1 minute. So a couple things that we can't confirm here are going to be the overall bias. That's going to be one of the things. I'll go over here too. So we're going to assume the overall bias for this specific trade here. Okay, so here's a variation V3. So first, you want to confirm the overall bias. As I mentioned, this is at some point in the past. This happened on June 3rd. So I can't check what the bias was at that time, but we're going to assume that the bias was bearish, right? We're just going to assume because this is a sell entry here. So if we have that met, you know, retail sentiment is like 65% long, fundamental bias is bearish, technical bias is bearish, all that is met, we're good. The second requirement, you want to confirm the high-low using K2 high-low indicator. So as I mentioned before, these high-lows here are identified when you turn on the K2 high-low indicator. You go to indicators, invite-only scripts, K2 high-low. Once you click on that, you have the these plotted on the chart. Typically, this is how it looks, but if you have that on, it'll show you the high-low there. So since we're looking for a sell here, you're going to confirm the high, which would be right there. Once you confirm that, you want to confirm that the high is a green candle. So you confirm that the high here is a green candle. That's going to fit requirement number 3. Requirement number 4, you want to confirm the following candle is opposite. So this candle here is green. The following candle is red. Fits a requirement. So requirements 1 through 4 have been met. The fifth and last requirement, you just want to make sure that you have a pending momentum in the direction of the trade. If you guys don't know how to do that, same thing. It's an indicator, the K2 momentum indicator. So if you don't know where to find that, you go to indicators, invite only script. It's going to be called K2 Trades proprietary trading system. This was like the very original strategy or very original indicator that we had. It was like the only indicator we had for a while. Unfortunately, I can't change this name. This name just stays that, but we've rebranded it as the K2 momentum so that you guys don't get confused. It doesn't say K2 momentum there, but when you click on that, it says K2 momentum on your chart right here. So once you have that, you turn that on, you have everything set up. Basically, you're waiting for a pending momentum in the direction of the trade. If you guys look here at these vertical lines or these vertical colors, you can see it goes from green to red to green to red to green to red, right? So if this is green right here, the next one has to be red. So since we're looking for a sell here, we're confirming a pending momentum in the direction of the trade. We have a pending sell signal coming because the most recent one was a buy. So with that said, you would enter on the open of the following candle, which would be right here. You'd set your stop loss at the previous swing, which would be right here, 300 pips. And then your TP would be the equal distance away. Once you have that all set up right there, let it run. There it goes as it pushes down and it hits full TP. So there's an example of a V3 on the 1 minute time frame. Let me show you guys another one on the 3 minute. Derek was mentioning. Same thing again. You're just looking for the same exact thing that we look for. I mean, the 3 minutes not really a good time frame, but I mean, if you want to apply it, you know, feel free. I wouldn't recommend it because it's not necessarily a really good time frame to trade on. So let me just see this real quick. Let's see what the requirements were again. I think this requires a higher stop loss, right? Yeah, so minimum stop loss of 300 pips on the 1 minute, 500 or higher on the higher time frame. So like we're looking for something here that has a stop loss of at least 500. Again, it's going to be kind of hard to find because there is like no there wasn't really too much volatility today. So I might have to go back to like a previous day of like last week. I'm just gonna go to like a random time. So I'm gonna go back over here and I'm just gonna go and look at, I don't know, right there, whatever day this is. Looks like volatility was higher at this point. So see this, not quite, it's 320 pips. We need at least 500 pips. No, volatility is super. Oh yeah, and CT said that entry earlier looked like a liquidity push, which it probably was. Sorry, CT, I just saw your message right now. But yeah, no, I could definitely see that. I think there's one entry right here. Perfect. Okay, so here goes an example for the V3 on the 3-minute. So as I mentioned earlier, we can't confirm the overall bias because this is at a previous time. You know, right now it's June 8th, this is June 3rd. You want to confirm the overall bias. We're just going to assume that it was bullish. We don't know if it was bullish or not, but we're just going to assume for this example here so that I can show you guys what it looks like on the 3-minute. So again, right here, you're going to confirm the high low. You have the low right here. For the next requirement, you want to confirm that the high is a green candle. We're looking for the low here. You want to make sure the low is red candle. This candle here is red. That fits the requirement. Fourth requirement, you want to confirm the following candle is opposite. This is a red candle. This is a green candle. Fits the requirement. And then you want to confirm that there's a pending momentum in the direction of the trade. As I mentioned before, these momentum signals are always going to be opposite of each other. So right here, we have a sell signal. The next signal has to be a buy signal. There's no way it can be sell and sell. It has to go from buy to sell. So with that said, we have this here with a pending momentum. The same thing we did earlier. You enter on the open of the following candle right there. You set your stop loss at the previous swing, which should be right there. 950 pips. Yeah, that's set up. You let it run. There it goes. Price pushes up slightly. And there you go, full TP. So there's an example of the V3 on the 3-minute. Pretty simple, same thing both ways. I mean, it's literally a checklist, guys. Like, it's really hard to mess this up. The only reason people mess this up is because they start doing their own thing or they just skip steps. Like, it's a checklist. All you do is check off the list. If you can check it off, you'll be perfectly fine. But, you know, the problem is a lot of people, they skip steps. Like, I see people skip the overall bias because they get FOMO. You know, if you lose a trade, that's your fault because you got to follow the steps. Steps are there for a reason. They're not meant to be, you know, intermingled. Like, if I put a requirement there, it's there for a reason. It's not there because you're supposed to ignore it. It's there because you're supposed to follow it. So just keep that in mind, guys. You know, whenever people tell me that they're losing trades and then they show me the trade they took, you know, probably 10 out of 10 times, not even 9 out of 10, like 10 out of 10 times, they skip the bias and they skip the momentum. These are the two ones that I always see people skip. I don't understand why. It's like not that difficult. This is the first step. If there's no overall bias, there's not going to be an entry. But for some reason, certain people just want to skip this step every single time. And then depending momentum, I could see people missing this because even I missed it today. But it's a checklist, guys, literally. Like, okay, check, 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 check. Now enter. Once you have all this checked off, you can enter a trade. It's really simple, guys. Like, the hardest part is really following directions. I feel like that's the biggest issue for most people. So other than that, that's it for the V3 on the 1-minute and the 3-minute. Gotcha. Okay, yeah. So Derek said I've been having a bad feeling on the 3-minute chart. So thanks for confirming. Yeah, I don't really like the 3-minute chart. We just got on the 3-minute because we got kind of FOMO on the 1-minute and 5. So we started trading on the 3 for a bit, but I don't trade on it anymore, Derek. Not that it doesn't work, because it still does work. It's just I don't like trading on it as much. But yeah, no problem. I'm glad I could help you with this here. So, all right, that's it with those questions there, Derek. Glad I could help you with that. Next question. Is from Sam. So Sam's question here is, Sean, would you close Forex trades before a spread swap for FTMO? Also, can you give your analysis for UC and AJ? So for me personally, I wouldn't trade Forex on FTMO because there's, as I mentioned earlier, there's a lot of restrictions. So that's one of the restrictions that I'm more afraid of. How you're mentioning to close before the swap spread. You don't technically, well, I don't know. I wouldn't know the answer to that because I don't hold into the swap spread. I only trade US 30 on FTMO. So, yeah, I mean, I would probably close it, but I would probably message FTMO and ask them like, hey, is it cool? Because if it's not, then you definitely want to close it because you don't want to violate your account for holding it over swap. So I don't think you need to because from what I remember, they said, well, I mean, I haven't traded Forex on it for like maybe 2 or 3 years now, but from 2 or 3 years ago, they said it was okay to hold it over the swap. You just can't hold it over the weekend. So, I personally would probably hold it if I was not that it's FTMO, but if I was using it for any other broker, yeah, I would just hold it because they're just set and forget, right? That's why I started my personal account because I want to set and forget it. I won't have to worry about FTMO, violating my account because I violated one of the rules. So, yeah, I mean, short answer to your question is I would probably close it because I don't want to have a violation. But I would recommend just messaging FTMO and say, hey, is it cool if I hold Forex trades over the swap? They'll probably say, yeah, it's fine, just no weekends. So if they say that's okay, then I would just hold it. Analysis for UC. Which UC are you talking about? Sam, are you talking about USD CHF or USD Cad? I'm assuming you're talking about USD Cad, right? Because this is what I'm looking for too. Yeah, okay, cool. So as I was mentioning before, guys, I'm looking for a seller. The reason I'm looking for a sell is because USD Cad right here is 72% long, right? So if it's 72% long, what am I looking for? I'm looking to do the opposite. I'm looking to sell. So with that said, I'm looking for a sell here. In order for me to get that sell, I need to get a sell signal that comes up here on USD Cad. Once I get that sell signal, it's going to line up with the trend meter. So once I have that, I will take that for a sell, and then I will let it run. That's what I would personally do. You guys can see here, there was another sell that came up over here, same difference. The bias was for a sell. So if you took the sell right here for USD Cad, which I did take myself, that's the entry that you would take. I would take it, let it run. Or actually, I don't remember if I took this one. What time did this entry come up? 4 o'clock. Actually, I didn't take this trade because this was at 4. I was asleep at that time. So I didn't take this trade here. But basically, that's what I'd be looking for. I'd be looking for something like that. But one thing that you want to keep in mind is that there was news around this period. So I feel like a lot of people forget to check news. And there was actually high impact news this morning. The reason why I wouldn't take that trade there was because, so this trade came up at 4 o'clock, right? If you guys remember this morning, there was news at 5:30. So I wouldn't have taken that trade there. Or there wasn't news at 5:30 today. There was news at 7. Okay, so I think at 7, that's where, yeah, that's where price started to get a little funky. Right at 7 o'clock. So you can see price was moving in profit. And then once the news came up here at 7, that's where it started to spike up, 7:30. So if I was in this position here, I think some people took it. Yeah, exactly. Sam said I pulled out early on the previous sell and it reversed afterwards. And that's a smart move. I would have done that, Sam, because you guys got to keep in mind, we don't pay attention to this news as much for US 30 because we only trade for like an hour. But if you're trading Forex, you kind of want to have an idea as to like, where price is going, because if you have news like this, it can easily shift price the opposite direction. You can see right here, price was perfectly fine. It was dropping nicely. Let me just rewind this. All right, so price was dropping nicely in profit right here. As soon as news hit right here at 7, you can see price starts to act kind of funny, bounces around, and then reverses. So that's why you want to be careful when you trade news like that. Yeah, no, exactly. Sam said just wondered why it reversed, but you explained because of news. Yeah, you want to make sure that you keep news in mind, especially for the Forex pairs. What you can do as well is you can just turn on the news here on Trading View, and the news events will just come up on the bottom right here. So you can be like, okay, price getting close to news. And it was medium news too. It wasn't light news, it was medium news. You could have just been like, all right, I'm gonna pull out of this trade because you want to get caught in this reversal. So yeah, for USD Cad, I am looking for a sell here if I can get some. Hopefully we'll get it early right here, Sam, so that we can enter it and then we can pull out before it reaches news right down here. Right, so we enter our sell, hit our TP, done for the day. That's how I would look at USD Cad. Your other question here is for AJ. I'm assuming for AJ you're referring to odd JPY. So for odd JPY over here, I'm looking for a possible buy. I know there's a buy that's still running right now. Is it this one? The only problem with this buy here is that it's such a huge move. It's like, I mean, it's been running for a while and it's still currently running right now. So let me take a look at that real quick. Odd JPY is currently, so it's not past the 70% threshold here, Sam. So, I mean, not that it won't come back, but for me personally, you know, I would probably, if I'm not in the position, I wouldn't have taken it. It's just too close. Typically, you want it to be past the 70% threshold. I'm sure at that point it was above that point. But right now it looks like it's kind of, you know, tapering off a bit. Not that it won't come back up, but it looks like it will likely, you know, swing back up or reverse at some point. Another thing to keep in mind is that there's news coming up right here. So there's news right here and news right there. So, I mean, I wouldn't be surprised if we see some weird movement right here. And then again over here. Yeah, and CT said if you're trading CAD, beware of oil price and news regarding oil. Oil drives CAD price. And that's exactly why USD CAD kind of spiked earlier. So yeah, I know CT is 100% spot on with that. So you can see the news here that caused it to reverse. It was EIA gasoline stock change and EIA crude oil stock change. So, and then right here as well, crude oil import, production, etc. All oil news, which obviously affected it super heavily. So thanks ET for that tip. I didn't even know that myself because I don't really look at the fundamentals like that. So something to keep in mind. iPhone's asking what's your profit target. The strategy is the same as it's been taught like 7 years ago. You're going to put your stop loss at the previous swing, and then you'll ride it to the next level. So, I mean, the strategies haven't changed at all, guys. If you guys haven't watched the strategy videos, go back and watch it. It's pretty simple. You just place it at the previous swing. So like, for example, I'll show you one over here. Nothing's really changed. You enter a sell at this point. Put your stop loss at the previous swing, which would be right there. Just about 40 pips. Once you have that set up right there, that's pretty much how you'd set it up. You just place it at your previous swing. TP is equal distance away for a 1-to-1 risk to reward. Let it run. And there you go, full TP. That's how you would take a trade. It's just the intraday strategy. So if you guys are not familiar with that strategy, it's the intraday strategy, but we're implementing the bias. So we're only trading when the bias is super heavy. If you go to the course, let me just pull it up for you guys. It's like one of the lower ones because this is like the very original K2 strategy. Like back then, this was the only strategy that we had. And it still works perfectly fine. You know, I created this strategy more than 5 years ago, maybe about 7 years ago, and it still works perfectly fine. You know, here we are 7 years later, still applying the same exact strategy I originally created for you guys. Well, not for you guys. This was my strategy, but I just started to share with you guys. Basically, this is the course here, the K2 strategy course. If you scroll down, it's like towards the bottom. It's called the K2 official intraday trading strategy. Right, that's where you would find it. You click on this video here, and then it pretty much tells you exactly. Like, man, this video is so old. You have to make a redo of it. I even have a PowerPoint for it right here. So if you guys want to go watch that, there's like a whole PowerPoint explaining. And the strategy is like super simple. You're just matching the momentum signal with the trend meter. If it's red and red, you enter a sell. If it's green and green, you enter a buy. But yeah, just the thing that we've changed here is that we're trading only when there's a heavy bias. So you're not trading every single entry. You're trading the ones that have a bias. And from what I've tested, forward tested live with you guys, we've had about, let's see. So I've had a total of 6 wins and 0 losses. You guys can see right here, the red ones are just commission. So this is commission price, but big profits here. I think this was gold. I locked in 5,044. EJA locked in 351. USD Cad locked in 177. EJ over here locked in 683. You know, et cetera, et cetera. They're all wins. So that's how you would apply that. So yeah, I know exactly. Sam said 6 wins and it's only Wednesday. Yeah, I only started applying this like on Monday, I think, or Tuesday. So like 2 days in, heavy profits. And these are set and forget trades too. Like I don't even think about them. All right, let me scroll up real quick. We have one more question here from Angela. Angela's asking, where can I find those notes at, Sean? The ones you have in black. So there's no notes for that. Those are just strategies for me to show you guys here. I mean, if you want to watch them, you can just rewatch the video, Angela, pause it, and then write them down. But there's no, we don't have notes for that. It's just for me to show you guys on the screen. Like these are notes that I created to show you guys, but if you want to copy these, you can just watch the strategy videos and then you can just write them down. I don't have them written down anywhere, so I can't really send them to you. I know there's other people in the group who have shared them before. I think Sisuk has shared them before. Actually, let me see. So there's Alexander. I think I sent it to Alexander over here. Okay, so I'll send this over to you guys. Just give me 1 second, guys. I'm gonna go get some water real quick. All right, guys, I'm back. Second, let me move the annotations for you guys. Okay, so I do have some of them right here. I didn't create this myself. One of the other, Sisuk actually did this, so you guys can thank him for it. I didn't do this myself. I will, I think he covered everything here for the most part. Here, what I'll do is I'll just forward this to the group, guys, if you guys want to take a look at this. I purposely didn't post these notes up because I don't want people to be lazy, right? I'd rather have people go and watch the strategy videos and get them down. So I specifically didn't create these notes on purpose. I will put them in the chat here, but I think you guys should still go and watch the videos. So that's going to be key, that you guys actually put in the work, because you guys could have these notes here and you'll still mess it up. I already know, like this happens with a lot of people. If you make it easier on people, they're going to mess it up. If you actually make them go and do work, they're going to come out a lot better, because you actually have to learn and understand how these things work. So I'll put the notes here, but I don't recommend anyone just, go straight off the notes. You should actually watch the video to understand how it's applied and actually test it yourself. So I'm just going to send this over here. in the group. Here's a draft of all the notes, strategies in the apply daily. Makes the soup or to review the videos to confirm. All right, Sisu, thanks for that. I'm gonna go ahead and post this up in the other group as well. But yeah, I purposely didn't make these notes. Like I didn't make a PDF or anything like that because I want people to actually go and put in the work to review this stuff. So thanks, Sisu. Yeah, no problem, Angela. Just make sure that you actually like you can keep the notes, but just review the video too to make sure that it's all right. Because I didn't make this myself. It was Sisu. Other than that, let me see if there's anything else here that I missed. Okay, so I don't see any other questions here. I do see a question here from Alexander though, so let me just check real quick. So Alexander said, thank you for covering my questions last mentoring session. I watched the whole video. Questions for this one. Could you explain the difference between leverage and margin? Okay, yeah, perfect. So Alexander actually asked that before. So he asked that during the live session. So basically the difference between leverage and margin are that they're like two completely different things. Leverage lets you trade a certain amount. So like, for example, if you're, it just depends on the broker. So like, if you're using an unregulated broker, they give you high leverage. So let me just show you like, leverage is ability to trade with X amount of capital without having the actual funds, actual total funds. That's probably like the easiest way to break it down. Margin is, I guess, borrowing, loaning money to trade, invest. I mean, that's probably the easiest way to break it down. So like, for example, for leverage, you can have, it just depends. I think for regulated brokers, they probably have changed it a little bit. It used to be like 100. So let's see, regulated brokers, leverage varies, typically 50 to 1 or less. Used to be 100 to 1. Unregulated brokers, broker leverage varies typically from like, I mean, it can go as high as to like typically around 1,001 to 1 or 501. You see this a lot. So the difference between this two, like these leverages, the regulated brokers typically will let you like trade like 50 to 1. So like if you want to take a standard lot, you need to have like at least like 10,000 in your account. Or not, maybe not 10,000. You probably need about like, it's going to depend on your stop loss and it's going to depend on how much you have in your account. The problem with this here is it used to be like 100 to 1. This will allow you to blow your entire account. The reason why regulated brokers have low leverage is because, I mean, you guys have seen what happened in the past when the stock market crash happened. You know, people lost a lot of money because leverage was so high. They've lowered leverage so that people, I mean, if you guys are using a regulated broker, it's like impossible to blow your account. It's like literally impossible because the leverage is so low. Like if you have like $100 account, you barely even trade. So that's why a lot of people opt to use unregulated brokers, right? Regulated brokers are like Forex.com, TD Ameritrade, Wanda, stuff like that. If you guys have traded on those brokers, you guys will realize that you can't trade very much. Like you're not able to blow your accounts because they'll kick you out of the trade before you get to that point. unregulated brokers don't give a shit. Like they'll let you blow your account in one trade. You can trade on Hugo's way with like $100 and you could lose that $100 in one trade and you're done. Um, those are set in place as safety precautions because they don't want people blowing all their money on like one trade, especially if they don't know what they're doing. So the difference between leverage is just your ability to trade with X amount of capital. Margin is borrowing and loaning money to trade and invest. So like for margin, you can tell the bank or you can tell your broker if your broker is regulated, like you can tell them, okay, I'm a doctor and I make like 200,000 a year or 100,000 a year. Like, okay, if that your credit's that good, we'll loan you 10,000 to trade because they'll expect that you can pay it off or you can pay it back. Or if you have a house, you can like pull margin against your house. So if you lose the money, they'll take your house away. That's the difference between margin and leverage. They're two completely different topics, or not really topics, but they're two completely different things. Leverage is just you leveraging risk against your cash on hand. Margin is borrowing cash to trade. So that's the difference between leverage and margin. If there's anything specific between the two that you like want me to go in detail with, Alexander, you can let me know. But those are the two main differences. Leverage is just able to trade more. The higher the leverage, the more you can risk. So if you have 100 to 1, you can blow your account like one trade. 51, they'll probably let you blow like half of your account or maybe a quarter of your account until they margin call you out. So a margin, I think that's what people get confused with. They get confused with margin and a margin call. So let me put this up here actually. Margin call is when you go past your a lot of leverage and the broker pulls you out to protect themselves. Because so I think this is what people get confused with. They see margin call and they think margin call and margin are the same thing. Margin is borrowing money. Margin call is like when you pass your leverage, like say you have $100 and then you go below 50 equity, they're going to pull you out because if the price spikes and you go into the negative, they're going to be fucked because they're going to have to, like, if you don't have the money to pay for that, you have a cash account, they can't really get the money from you. So that's why they pull you out. I think there was a movie called Margin Call before. Is there? I think it's on Netflix right now. If you guys have never seen it, it's a pretty good movie. Yeah, Margin Call. It's a pretty interesting movie, and I think it's on Netflix right now. So you guys will, if you guys watch this movie, you'll see like how the margin call happens. Basically, what happened here was like when the stock market crashed, there was a margin call because they were in so far in drawdown due to something that was happening in the market that, like, basically this is a hedge fund and they got margin called out, so they just lost everybody's money. I don't know if anyone's seen it, but it's a pretty good movie. I think it's on Netflix right now too, or Hulu, one of those two. But that's the difference between leverage, margin, and margin call. I think this is why people get confused. So that's it for that right there. Let's see. Next question from Alexander is how to, yeah, it was about subprime. Because they were leveraged in the market because they were like investing in subprime loans, and then that's basically what happened. They got margin called out because they went belly up. But subprime loan, like investing, it goes into everything. It's not just trading Forex. Investing goes with investing in REIs, investing in other futures, not just Forex. So like, yeah, subprime would be considered an asset as well, just like this is. It's just not the same type of trading, it's just investing. So yeah, it does fall within. Anyways, next question from Alexander. He's asking, how to calculate proper 3% risk on pairs. Okay, let's see. How to calculate 3%. So there's a lot of different ways to do this. You can use a lot size calculator, or if you're trading directly on TradingView, you could just enter a trade. So if you enter a sell here, so say for example, you're entering a sell And this is why I like trading directly off of TradingView, because you have this tool that's built in. So like, say for example, you're entering a sell here and your stop loss is going to be 50 pips, right? And your TP is 50 pips. If you want to calculate your 3% risk, you just go to risk right here. You type in 3 and voila, you have it calculated for you. That's how you would do it. That's one way of doing it. I mean, if you want to do it by hand, you can do that too. You just do 3% of like whatever your account size is. Another thing you can do is you can look up a lot size calculator on Google. There's a lot of ways to do it. You go here, you can go to my FX book position size calculator. You know, depending on what pair you're trading, you'll choose your pair there. Your account size, I don't know what your account size would be. Say it's 100,000 FTMO. You want to do 3% risk. Your stop loss is, say, I don't know, 500 pips. Calculate, and there you go. It tells you what lot size to use. So there's different ways of doing it. I mean, or you can do it by hand if you really wanted to. I wouldn't recommend it. It's a lot of work. You can just use a lot size calculator, or you can use TradingView. Yeah, no, exactly. Wesley said CTrader does these calculations for you as well, makes entering trades easy. Yeah, and this is why I'm using Forex.com as my broker for my Forex pairs, so I don't have to calculate it. For US 30, it's easy because I already know what each pip is worth. For Forex, each asset is valued differently, so you have to actually know which pair you're trading. Like a 3% risk on USD Cad is not going to be the same on odd NZD. It's going to be completely different. So this is how I would personally do it. You can use a lot size calculator if you don't have that option. There's a lot of here. So if you look up lot size calculator, you have one from my FX book, you have one from Baby Pips, you have one from Cashback Forex, you have one from like all these different websites. Like, and they're all, I mean, Baby Pips is probably the easiest one, because it's like a kindergartner's type thing, right? You look like you're like in kindergarten right now with everything's all big, and you can like easily type in and whatever account size you have. Risk percentage 3%, and then your stop loss is, I don't know, 50 pips. Calculate. Tells you what lot size there. If you're using units, that'd be units, standard lots, mini lots, micro lots. Depends on your broker, and then you can always choose your pair here. So Baby Pips is probably the easiest one to use. This is the one that I mean, if you watch the videos on the course, that there's a video explaining how to do this. This is probably gonna be your easiest option. It just doesn't. The problem with this here is it doesn't have indices, so that's gonna be an issue. You might have to do it by hand. But for Forex pairs, you can figure them out here pretty easily. But I would personally just use TradingView. It's the easiest one here. Or this is what you could do. So what you could do is you could also open a paper account with, so this is what you could do. Let me just log out mine. You can open a paper account. And what you could do here is you can just, I would have to delete my account and restart it. You could do that, and then you could change your account balance to whatever your account balance would be. And then you can take a trade here off your paper account, and then you would just, it would automatically calculate it for you. I mean, there's a million ways to do it. It's like so many ways to do it. It just depends on like what works best for you. I think this would probably be the easiest way, actually. Actually, I don't know. It's different. It depends on your broker, because some brokers use different lot sizing. So you probably want to cater it to your broker. Your broker might even provide one yourself. But yeah, I think that's it for that question. Now, let me see if there's anything else that was. Yeah, I wouldn't, because so Alexander mentioned the short tool, the long and short tool. Don't use that tool to calculate lot size. This tool is not going to give you. I mean, technically you could. Okay, so like say for example you're using this and you have a 10,000 count. You have risk percentage of 3%. So the problem with this here is that this doesn't necessarily tell you what lot size to use, right? It gives you a number there, but it's not super accurate because you have to like move the decimals over. So this would probably be better because it'll tell you how many units you'd be using here. So like 3% risk. It tells you to use and we're just going to keep this equal 50-50. An 810,000 units, which is equal to a 8.1 lot size, because a standard lot will be 100,000 units. So if you have 100,000 units there, this is 800,000 units. It would be an 8.1 lot, if that makes sense. I mean, it's confusing. I mean, you really have to like play around with it to understand it, but that's how you would figure it out. And that's probably the way that I would recommend to do it. Other than that, let me see what Alexander's next question is. So that's it for that right there. Next question is from Alexander. His third question is, will you signal your entries for intraday strategy with cash account? We have all the tools needed to take them on our own, thanks to you, but just for extra confirmation. Possibly. I mean, probably not, because if that's the case, then I'm doing more work than I need to, right? That's the whole point. I discontinued the signals because I didn't want to call. It was just too much work. Like I was calling signals before, and yeah, my signals were great, but everyone was benefiting off my work basically. Like I would call signals and they would hit, but I'm the one that would have to be at the computer to call the signals, right? Like to call manually. So I probably will not be calling the trades. I'll probably give you guys like a markup and show you guys that I'm in the trade, but I'm probably not going to be calling them like signals. If that's the case, then, you know, I'm probably gonna have to start charging for signals again, which maybe at some point I would do that, but I value my peace of mind. So I'd rather just not call signals, and I'd rather not be bothered all day, because that's pretty much what happened before. When I was calling signals, the trades would hit, but man, my DMs would be going off like 24 hours a day, right? I was literally going crazy. I was like, dude, I can't do this because so many people bother me like at all hours of the day, asking how to manage a position, what should they do next, should they enter this position? And I just hated doing that. That's why I only do live trading now. So I probably won't be doing live signals. Maybe if there's a way I can automate the process at some point, which I was talking to Ed about, because I do have a script here to pretty much, take trades automatically that I've created to backtest, but odds of me doing signals again are like highly unlikely. It's just too much work that I don't want to do. Like I make so much from trading, I don't need to charge for signals or anything like that. I could do well just from trading my own accounts. So yeah, I think that's it for Alexander's questions. And the thing with this too, guys, the thing with this, guys, like how Alexander's asking, for extra confirmation. The thing is, you guys have to learn how to make mistakes. That's the thing that I have to teach you guys too, because yeah, of course, I'm going to do good on all my trades because I know what I'm doing. But if you guys depend on me too much to like call trades, call signals, literally break it down and hold you guys' hand through everything, you guys will never learn, right? That's the main reason why I prefer that you guys actually learn the stuff, because if you don't, what happens when I take a day off and you guys are going to be completely lost? So, I'm trying to teach you guys how to develop the skill yourselves rather than people depending on me, because that's pretty much how it was before. Like nobody knew how to trade and they just waited for me to call a signal, and it would hit TP, but they wouldn't understand like what was the thought process behind it. So other than that, let's see if there's anything else here. I think that's it for that. Yeah, Emilzon said Stinu is a good app. Yeah, I remember Stinu before. It used to be free. Yeah, so Stinu was a good app back then. It probably still is a good app, but you have to pay for it now. Before it used to be free. So if you guys want to use that to calculate your lot sizing, you can do that as well. But I don't use it. So let me see if there's anything else here. All right, let's see. We got Swelly over here. Swelly's asking, bro, did you do an analysis for GJ? I haven't. So let's take a look real quick. Or actually, I took a look at it earlier, but I haven't taken anything. So for GJ over here, I believe we have a bullish bias. I'm gonna go over here real quick. Bias over here with GJ is 72% short. So we're definitely looking for bias here for GJ. In order for us to take that trade, we need price to pull back a bit, retracement, and then we can catch as it comes back up. So there's not really much for us to take here off GJ until that retracement comes down, because at that point we'll get a buy signal. So if you guys look over here, pretty much all the buys that came up for GJ from this period right here and on have all hit TP. So like for example, right here, a buy signal, trend meter was green. Sentiment was bullish in our side. So right there, full TP. Again, right here, another one, full TP. Another one right here, full TP. This isn't going to be the full TP. I'm just showing you guys that it does a TP. And that's about it. It's like 3 back-to-back wins right here since May 26th up until June 2nd. So let's see, I think that's about it. So well, there's not really much to analyze for GJ because there's no retracement there. So we can't even take a buy until price does retrace, which I don't know when will happen. Maybe it'll happen by London, but maybe not. Okay, let's see. So Maria's asking, what's your most easiest strategy? I mean, they're all pretty easy in my opinion. Yeah, you got to figure out what's easy for you, right? Because I can literally apply all the strategies and not think about any of them, and so can a lot of other people. So I mean, it depends on like what's easy for you. Like what's your problem? Like what you need to figure out is like try the strategies out, and if it's difficult for you, then it's not gonna be easy. Like I could say this is the easiest strategy. Like unless you're colorblind, it's like literally impossible to fuck this up, right? Like to mess this up right here, guys, you're matching colors. It's like green and green or red and red. Like you really cannot mess this up unless you're colorblind. And if you're colorblind, you can just change the colors. Like if you can't see colors, you can literally go to the momentum indicator and you can change this to black and white or black and gray if you're colorblind. And I'm saying that as a joke because I'm not messing. I don't care if anyone's colorblind, but like this is really hard to mess up. You match colors. Again, like CT said, pivot strategy, right? So I said this is probably the easiest one. CT said that pivot strategy is the easiest. Again, this is really hard to mess up. You're looking for a momentum signal that's above the pivots. It's really hard to mess this up, right? So again, here, it's the same entry. Like you could have had an intraday entry right here, and you could have had an entry right here where it's like above the pivots. Literally, you're looking for a buy signal above the pivots. Full TP, right? So, I mean, it's really up to your own preference, where you have to go and like actually test them out and see what works best for you. Because maybe the variations work easier for you. The variations I would consider a little more complicated, but for some people, it's easier for them to see. So, or like if you're applying the daily strategy on US 30, that's like really hard to mess up too, but people mess it up all the time. I don't understand how it happens, but people screw it up. Like if you're applying the daily strategy for US 30, I mean, this is probably the easiest one because, but the thing is like people don't know how to tell time, I guess, because people still mess this up, which is beyond me. I don't know how people mess this up. Like literally you're just looking for the first signal after market open. When was like one that came recent? But the thing with this is you have to confirm the overall buy. So I could see people messing up with that, but I still see people well, not that many people, like very rarely I see it happen. I still see people mess up on this. Like here's another strategy that you could apply for the daily, right? This is the daily strategy for US 30. look for entry after, like, this isn't even a real requirement. You're just looking for an entry after 6:30. So 6:30 was right here. All you have to do is wait for the, time to pass. So that's not even a real requirement. Confirm overall bias. Okay, that's one requirement, but um, even so, this is like really simple stuff to confirm the overall bias. If you were to just ignore the first two requirements, the only thing you're literally looking for is the first signal. So like, for example, here you have a first signal for sell, you enter that right there, and then you write it for 150 points, which is 1,500 pips. You let that run there, and then it goes to, it takes a while, but it does go to full TP right there, right? That's that strategy. So I just showed you guys 3 examples of 3 different strategies, and they're very simple. Like, all you're doing is reading off a list here or checking off a list, and that's how you would identify these entries. So I mean, there's a ton of strategies for you to apply there. What I'd recommend is you actually go and like review the strategies, Maria, because like, thing is, I can't tell you what's easy for you. Like, I can tell you math is easier. I can tell you that algebra is easier. I can tell you that coloring is easy, right? Coloring isn't easy for everybody. Same are these strategies. Like, if you can match colors, then great. It's probably the easiest one for you. If you're like CT and you can see where the momentum signals come above or below the pivots, that's another easy one for you as well. If you can just tell time, 6:30, and you know that signal comes after, then that'll be easy for you too. But it's just up to preference. So what I'd recommend is you just go back and review all the videos. I know you probably don't want to do it because it's going to be a lot of videos to review, but that's the only way you'll figure out what works best. And reviewing the videos is not enough. You have to actually go back and test them to see if, like, you have the ability to identify the entries and strategies and whatnot. But yeah, I'd probably stick with the intraday, but make sure that you're trading in the direction of bias, and then also with the pivots. I mean, either way, you're going to have to learn how to identify bias, whether you like it or not. That's going to apply to basically every strategy. Yeah, Shannon, so the videos are very helpful. I've been reviewing them. Yeah, no, awesome. And that's what I tried to aim for, guys. When I created the videos, I tried to make them as simple as possible so that there'd be no confusion. But it's really up to you guys to figure out what your weaknesses are and what your strengths are, so that you know what to focus on. Other than that, let's see, another question from, yeah, CT said 3-minute pivot daily was perfect today. Yeah, and I was looking at that too. Yeah, they all hit right here, like literally all of them. All right, anyways, the next question over here is from B. B's asking, which broker charts do you think is best to look at for Forex charts? I know FXCM is on top. The best one, in my opinion, is going to be Forex.com. So from like when I started trading, like when I first started using TradingView, I've always used, well, I've used all of them. I saw that Forex.com was the most accurate. Awanda was probably the second. I liked FXCM because more signals came up, but I realized that they weren't really that accurate. There's usually going to be like maybe a couple signals that are a little off, but for the most part, they're all pretty all right and solid. But other than that, I would probably just use Forex.com. And I'm biased towards using Forex.com because that's my broker. So if you want to play around with it, you could be, but from my experience and from like all of my years using TradingView, and I've been trading on TradingView for like definitely over 5 years, probably over 7 years. I've been on TradingView. I've been, when I've tested stuff, it's always been Forex.com. They've been the most accurate in my perspective. So, all right, guys, I don't know if there's any other questions here. If you guys have any other questions, feel free to put them in the chat, and then I could, CT sent me a chart. Nice. So CT actually, he saw this liquidity push earlier on open. I wish I saw it. I would have taken it. I probably have it marked up here. Yeah, I did. So I had it marked up right here. This is what CT identified. He identified this liquidity push right here on open, and looks like it was a quick profit right there. Yep. Real smooth. Nice. Man, I wish I caught that. It's all right. The spread's kind of wide, so I probably would have. No, it still would have been fine. But the spread is and was a little off right there. Let's see. B said, okay, I'll start looking at Forex.com. I noticed FXCM was a little weird at times. Yeah, and I agree. I noticed that too. I like FXCM because you get more entries on there, but it was a bit off. Like you'll see that the momentum is not correct in some instances. Yeah, so B is currently in a CAD CHF trade. So let me go over here and check the bias real quick. CAD CHF is not on daily FX. I'll go over here to my FX book. Oh, gotcha. Okay. So B said it's on. I'll probably see it on here too. Let me see. CAD CHF. There we go. So it's 96% short. So I'm assuming you took a buy, right? CAD CHF. Oh, nice. Oh, this is on the 1 minute though. Let me go over here to my other chart. CAD CHF. I do this for 135. Yeah, I could probably see this. I don't want to give you guys my login details. So unfortunately, I can't log into my thing. So I might take that trade with you. It does look good. Sentiment is super high. And if I go for 35 pips, I mean, it's not really a huge push. There's not really much news. Yeah, B said I noticed if you search any pair looking for sentiment, you'll find more accurate data on IG.com. Yeah, that's I would definitely do that. So it's CAD CHF, ID sentiment. And this is where I would actually look, guys. So I would use an actual broker. I wouldn't really use my FX book because the thing is anyone can put whatever BS data in here and it'll still work. Because anyone can create an account for my FX book. If you look on IG sentiment, these are actual like live accounts that are trading it. So if you look over here, yeah, it's actually 68% short. So it's not where I want it to be. I want it to be more than 70. So I'm probably going to hold off on this myself, B. If you said you're in it, so good luck to your trade there. Hopefully it does hit. But for the problem with this here is you want a really high bias because it's not like US 30, right? For US 30, we're like getting in and out of trades quickly. For these trades here, you're going to be holding on to these for hours. So if your sentiment isn't high enough, it can start shifting and reversing the other way. That's why you want it to be more than 70% and like consistently above that. Because the Forex pair is here, you're intraday trading. So you want to make sure that that bias is still heavy 4, 5, 6, 7, 8 hours later, right after your entry. Because the thing is, the worst thing that can happen is you enter a trade and then an hour later, the buy starts to get weaker and weaker. If it starts to get weaker and weaker, your trade's going to be in trouble because it's probably not going to keep pushing in your direction. That's why like when I look for something here, I look for like a very, very strong bias, like silver over here, 95% long. I'm like, okay, for sure, this is going to have to keep dropping, right? And if I go over here to silver, let's see, what's silver? XAD. I forgot what silver was. It's not XAU. Yeah. Oh, XAG. Okay. XAG USD. There we go. All right. So silver over here is currently 95% long. So I will for sure would be looking for sells here. I mean, there's no sells that came up anytime soon, but I think if there would be one, Okay, so right here, look, check this out. If you guys go back like about a month, I'm pretty sure the bias was still a strong sell. You can see if you took any sells here for gold, or not gold, for silver, straight TPs right there. Straight TPs there. Straight TP right there. Straight TP right there. Currently right now, there's no sell entry, but I mean, if there was, it's probably gonna drop even further. See on the higher time frame. Yeah, because this thing's been dropping for a while, or like it's due to drop further. Because you can see right here, we had price drop. It's now just been consolidating for like a month now before it probably drops again further. So you want to make sure that you have a really, really high sentiment in one direction or the other, because the last thing you want to do is get caught in trade and then end up getting screwed later when you can't get out of the trade or something happens. So, all right, other than that, guys, I think that's it for all the questions. Oh yeah, fortunate. Emilzon said I tried to take sell liquidity on FTMO, but it opened 5 minutes late. Yeah, unfortunately, they close early and they open later sometimes. So that's an issue with that. Let's see, Maria. No problem, Maria. Maria's asking with a pro trading plan. Yeah, that should be fine. All right, so I think that's it, guys. Unless you guys have any other questions, we're gonna wrap this up. I've been on this mentoring session for about an hour and a half now, so I think it's about time to wrap it up. If you guys have any other questions, feel free to put them in the chat. Otherwise, just a reminder, we have these mentoring sessions once a week. So if you guys didn't get your questions answered today, it's fine. We'll be back next week. Let me see if I can check my calendar. Let's see, so like for next week, we'll probably have it either on Tuesday, Wednesday, or Thursday. I got to check my messages to see if anyone requested a specific day, but I think those are going to be the days where we will probably have it. So yeah, if you guys have any other questions, feel free to email me or message me on Telegram. I'm here to help you guys out. If you guys are too nervous or too scared to ask me a question, feel free to pop in the chat. Just put your question in any of the chats here, and someone will answer your question. If not, I'll answer your question on there. But yeah, guys, other than that, today is Wednesday. We have 2 more days of trading left. So hopefully the market continues to move smoothly. I know we have heavier news tomorrow. We have unemployment news coming out tomorrow morning at 5:30. Right here, unemployment claims. That's going to affect the market pretty heavily. And then on Friday, we have inflation news. So market should be picking up tomorrow and the day after. So, all right, guys, other than that, we're going to wrap this up. If you guys have questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow morning for the next live session. So no problem, Shannon. And I will see you guys then. So have a great rest of your afternoon, guys, and I'll catch you guys.